Hey champs, welcome back to Libertas Trading and welcome to the event preview for Australian jobs on Thursday, the 13th of November 2025. So just a quick heads up, I am filming this on Tuesday evening. I'm here in Switzerland right now, heading back to the UK tomorrow, so I've got a bit of a travelling day. So for that reason, I will be uploading this on Tuesday night. So basically anything that's in markets Wednesday won't be on this trade preview, so apologies for that. Now, what am I expecting, or what should we be expecting from the jobs print Thursday morning? I'm basically only expecting a short-term reaction for a few reasons. The first one is based on previous reactions. The second one is based on the fact that this is a very volatile data set. So until we start to see a trend, we can't expect rate pricing to change too much. And then thirdly, talking of rate pricing, there's basically nothing priced in for the RBA, and I can't see that changing on a really bad or really good print. So we've got 3 basis points of cuts priced for the next meeting. We've got 17 basis points priced over the next 9 meetings. So, pretty boring stuff from the RBA. If we just look at what they had to say at the last monetary policy meeting last week. So as we know, they noted that inflation's picked up. I'll keep this short. Growth's been okay, labour market's tight, unemployment rate's at 4.5%, which is far from desirable, but no need to panic right now. Uncertainty in the global economy, which is of course an issue for Australian dollar and the Australian economy. And they basically held rates. It was a unanimous decision, and there was nothing really special to talk about. So massive nothing burger there last week, and also, just to emphasise that I can't see rate pricing changing too much based on one labour print. So yeah, not expecting any huge moves from the Aussie dollar on the edge of this, but it still could be worth a trade. So let's look at the tradable scenarios. So it was actually a little bit tricky sort of going through past reactions and trying to work out, what's going to move markets. As I said, very volatile data set. We do get some massive beats and massive misses. The 2 main prints are the full-time employment and the unemployment rate. We've also got the participation rate and the part-time jobs not on this chart. But basically, we're looking at these 2 numbers in particular. And on aggregate, we want them both to print either -20 and above 4.6 or above 50 and 4.2 or lower. If we get like a 4.3 or a 4.4 print, but the full-time jobs comes in at like 80 or 90k, that's worth a trade. And conversely, if we print like a 4.4, 4.5 on the unemployment rate, but the full-time employment comes in at -50, -60, let's say, that will also be worth a scalp. However, if unemployment rate comes in at 4.6 and the full-time employment comes in positive, I'll be keeping out of a trade. And again, if the unemployment rate comes in at 4.2 or lower, and this full-time employment comes in at sort of like 5 or 10k, again, for me personally, not worth a trade. So just talking through the numbers, for a dovish reaction on unemployment, we're looking for -12k or lower, which would be 20k below the minimum and the lowest since Feb, which could be quite nice for headlines. And then for a hawkish reaction, anything above the max of 45k should show decent job growth and the highest since April, which should be nice for a scalp. But of course, more importantly, we're looking at these full-time numbers. So I'm looking at -20k or lower, which was based on July's print where we saw a very similar consensus. But in an ideal world and for a longer term trade, you'd want something worse. So that's based on a 4.6% unemployment rate or higher, which would be back at November 2021 levels. So if it comes in at 4.5, I would trade, but want to see the full-time printing even lower. So I think July's print came in at -35k, which is obviously lower than this, but then having the unemployment rate back at 2021 levels, could be quite substantial for the Aussie dollar. So I just went for -20k here. And then on a hawkish reaction, for the full-time employment, I'll be looking at 50k or more, which should be good based on the August, February and December 2024 prints where we had similar forecasts and some nice scalping opportunities out of them. And then for the unemployment rate, I'll be looking at 4.2% or lower, which will be back at May levels and a very positive move in the right direction. If it comes in at 4.3%, I would trade, but we'll want to see the full-time jobs printing even higher, as we spoke about. And then, of course, expected reaction, Aussie lower on a dovish reaction, and then Aussie higher on a hawkish reaction or hawkish print. So let's just go back through some of the past prints to see how markets have reacted to certain data points. This is something I really love doing, just to sort of get a feel on how the market's going to react in the future. So last month, a bit of a strange one and a bit of a overreaction in my opinion, even though we did only last about 7-8 minutes until we started reversing. But we had that full-time employment come in at 8k, the employment rate coming in at 15k, but importantly this unemployment rate at 4.5%, which was a bit of a shock to markets. So this wasn't tradable, but just looking at the 5-second reaction on this one, yeah, if you were ace on this one, you could have maybe scalped a bit of profit. But this just an example. Really, we really need the full-time and the unemployment rate to come in line with each other. So just a mixed example here, and just a reason why we don't trade these numbers. Just head into that August print. Again, not the best sort of numbers, but we did have a massive print in full-time employment. So they were forecasting the employment numbers to come in at 25k, and we printed 61k or 60.5k on those full-time employment numbers. So really massive there. But that unemployment rate coming in flat wasn't ideal. So we did see a fairly nice move higher, but it wasn't the best print of all time. So just going down to the 5-second chart, we can see because of the less desirable numbers, we did get a really nice fill on this one. So we would have got a nice entry and could have made some good profit. But after about, 70, 80, 90 seconds, we just, end up completely reversing. So again, we really want these two numbers to come in together. But it does go to show that if the unemployment rate comes in flat and we do get a massive full-time print, it can be worth a scalp. Just head into July's print for the June data, and this was pretty perfect. So we had the employment rate coming in below the low. We had full-time employment coming at minus 38k, which is really nice. We had the unemployment rate coming in 0.2% above the consensus and 0.1% above the max, which was really nice. And you can see when both of these things line up, we get a really nice move to the downside. And yeah, really nice entry here. It wasn't too much of a fast move, so we could have got some nice fills, and the price just reversed lower. So just quickly looking at the 5-second chart on this one. So yeah, again, perfect data. Fell down, bit of a pullback to about 15-20 seconds, and then we just continued lower. And yeah, taking profit around these levels would have been really nice. And then this data from Feb, which is a good reason or a good way of showing that the unemployment rate can come in flat and we can have a really nice full-time employment print for a trade. So we had the employment rate coming in at 44k, or the employment change coming at 44k, which was above the max. We had full-time employment at 54k, which is a really nice number. Participation rate coming higher, and then the unemployment rate coming flat. But we saw a really nice move in the Aussie US dollar. And then again, just looking at the 5-second chart, where the unemployment rate did come in flat, again, we got a really nice entry and a push higher. Again, taking profits around that 7 or 8 minute mark seems to be pretty good for the Aussie jobs data. And then just a final example of a pretty perfect print was December's data, where the employment rate come in higher above the max. We had the unemployment rate, which came in well below the minimum and 0.3% below the consensus, and then that full-time employment at 53k. And again, here you can see a really nice move on the 1-minute chart. Again, we did peak at 2 minutes, so it wasn't the best reaction. But looking at the 5-second chart, you can see here that even though it did peak after sort of 90 seconds or so, where you got such good entry, you're risking sort of 12, 15 pips to make, to make 20 pips. So again, for a 1-to-1 here, you would have taken some nice profits. So that worked out really well. Now, just heading back to the trade scenario sheet. As I said, I won't be trading a medium-term play. Sorry. But for anyone that is, for a dovish reaction, you can look at Aussie New Zealand dollar shorts. So it's a little bit risky with the New Zealand dollar being so weak the last few weeks and a major level being broken in the pair. But there's a lot to like about downside. So we found good resistance at the 116 psychological level today. We're miles away from the 100 and 200 daily moving averages. And it's the purest Aussie rates play, with both economies being so similar. We're also coming into a period of seasonal weakness in the pair, very much against the trend, but we have seen some nice price action today, being Tuesday. So quickly showing you the chart on the Aussie Kiwi. So just looking on the weekly chart, you can see this massive level from 2022, which we've just broken out of, which is of course a bit of a worry. But you can also see how far away we were from the moving averages there before we saw a massive reversal. This is usually a mean reverting pair. And then again, how far away we are from the moving averages now. So, quite similar distances, and it is looking like the pair is way overbought. Just heading down to the lower time frames. You can see we found some really nice resistance at that 116 level, and then today's price action has been pretty solid as well. So, this could be nice looking for some downside. Then also you can look at some Aussie Swiss franc shorts. So if we get some risk off sentiment going into the data tomorrow. Also the Swiss franc has been really strong this week at the time of recording. We found resistance at a nice technical level in the pair. We're going with the longer term trend here, which is always nice. And the pair didn't do too much with all the risk on sentiment we've had, which is also promising. So just looking at Aussie Swiss franc shorts. So again, going with that longer term sort of downward momentum. We've found a bit of a quadruple top here at that sort of 53 level, 0.53 level. So 1, 2, 3, 4, and then we start to move lower again. So that could be really nice to look for some downside. If we get some risk off in markets, this could be really promising. Then for a hawkish reaction, if we get a really nice print, pound Aussie shorts, which I feel like I've been going on about for months. So we had weaker than expected labour data across the board from the UK today, which did change rate cut expectations quite higher. We got the autumn budget expected to be bearish for the pound, so that could continue to see pound sellers into that, especially with the current fears over the economy. We had a break and retest of the important 203 level, which was quite impressive, but we would like to see some risk on sentiment going into the print. So just head into that chart. So here at this 203 level, we've got a support term resistance. We've had a bit of a break and a retest and then a move lower. Also to note, we do have UK GDP coming out about 6 hours after this print. So if you are holding longer term positions, something to be mindful of there. Now, as I said, I am only looking for a scalp. So for me, any scalps I'll only be looking to trade are the Aussie US dollar, the Euro Aussie dollar, and the Aussie dollar New Zealand dollar, going for what's strongest or weakest before the release, and also favouring a sell over a buy. So for the Aussie US dollar, I'll be looking for an 11 pip target. For the Aussie Kiwi, a 15 pip target. And then for the Euro Aussie, a 22 pip target. So 6 out of the last 7 tradable prints, it would have been best to enter the trade at 5 seconds. So basically as soon as possible once those spreads calm down. So once properly digesting the data, I'll be getting in as soon as possible. So yeah, good luck with that one, guys. And just for some quick housekeeping a second, anyone who's not following us yet, check us out on Substack at Libertas Trading, Libertas Event Trading. So I think I did about 7 previews last week. I'll be doing 3 previews and a week ahead video this week. So that's 4 videos. So you're getting about 20 videos a month. It's free to sign up, no card details needed, and hopefully some good content for you guys. Anyway, have a good evening and good luck.